Is this an indication maybe the economy is weakening?
I think that we're seeing that the headwinds on the consumer sector are mounting. And part of that is the inflation story and rising energy prices. I think part of it may actually be a fiscal drag, so that the support from fiscal policy that has been so important for the consumer through the pandemic, it's phasing out and starting to even turn negative. And I think we're seeing some of that in these numbers. And kind of putting it together, consumer sentiment is starting to soften. Now, lest I sound too negative, the consumer also has a fair amount of momentum. And so the headwinds are becoming more intense, but the momentum is still there. Now, how it all plays out in coming quarters is an open issue.
Yeah, well, the fiscal drag is a really important point that we forget. Year over year, there's not nearly as much fiscal stimulus coming into the economy. And I guess that's what you mean by fiscal drag. But I guess one of the things I'm a little perplexed about is this good news or bad news? Because we want to get inflation down. Can we get inflation down without this sort of drag?
I think this is the question, is that the Federal Reserve and economic policymakers, in thinking about the economy, they want to bring inflation down. In order to bring inflation down, the economy's got to slow some, but they don't want it to slow too much, because then they've got to face recession risk. And so they're trying to find kind of that Goldilocks, that soft landing, where there's some moderation, but not too much moderation. So some slowing, but contained slowing is, I think, what we're hoping for in the numbers.
Well, and Nathan, that takes us forward to tomorrow when we get the jobs numbers for the United States. And I guess I have a similar question. Can we get inflation under control if we do not have more unemployment?
We have a very tight labor market at the moment. And the thing that's extraordinary about it is it's already very tight. And the ongoing demand for labor, particularly in the services sector, is very significant. And we're starting to see those effects pass through into higher wages and more inflationary pressure. And we continue to hope that there's a chunk of people on the sidelines that are waiting for the pandemic to be in a better place, who have family obligations that may change as the pandemic improves, or people who have retired that decide they want to come back. But this labor market may mean higher wages still, more inflationary pressures. And that does pose a challenge to this soft landing scenario that I was describing.
Well, let's go back to those economic projections out of the Fed that we had a couple of weeks ago, because they projected that we're going to have more inflation, that we're going to have higher rates, and yet the unemployment rate would not go up at all. Is that realistic? Do you think there are enough people waiting on the sidelines that might happen?
Well, when Jay Powell was asked that question, it was a very challenging answer. And I think it is difficult to get economic slowing with kind of an immaculately flat unemployment rate. Maybe that's possible. Maybe we'll be able to find some pockets of labor that are not tapped yet. But I think it's going to be challenging. And the possibility that we might see a higher unemployment rate, which often builds on itself and generates meaningful recessionary pressures, is a distinct possibility here.
Nathan, finally, you mentioned the possibility of recession. What do you put that possibility at?
I think that globally, it's around a third. The geopolitical situation, the energy situation is very severe. I think in the United States, we are insulated a notch. But Alan Greenspan once said that the United States cannot long remain an island of prosperity and stability in a world that's struggling. And when I think about kind of the global situation, coupled with the Federal Reserve potentially hiking very rapidly, maybe 1 in 4 over the next 18 months, it is significant, David.